Eastern Time, with JOLTS data set to come out at 10 a.m. On the earnings front, Dollar General is set to report before the bell, while Adobe Systems is due to report after the bell. In Asia, shares there seesawed today but closed higher as investors digested monetary policy decisions from the Bank of Japan, the People's Bank of China, and the Federal Reserve. The Bank of Japan held monetary policy steady and maintained a positive view on the economy, signaling that no expansion of monetary stimulus was due in the near future. The Japanese benchmark Nikkei 225 was up just 0.07%, and the People's Bank of China raised its short-term interest rate by 10 basis points on both medium-term lending facility loans and its open market operation reverse repurchase agreement. China's Shanghai Composite finished up 0.86%, and the Shenzhen Composite closed 0.96% higher. Hong Kong markets reacted positively after the FOMC decision. The Hang Seng Index rose 1.3%. The head of the Hong Kong Monetary Authority announced it will raise Hong Kong interest rates up by 25 basis points to 1.25%, a move that will impact capital outflow and market volatility.
Hong Kong dollar interest rates will gradually increase following the rise of US dollar interest rates. While it is difficult to predict the precise pace of Hong Kong dollar interest rates normalization, I would like to remind the public that they should not underestimate the impact of higher interest rates on the serviceability of their debts, especially mortgage loans, most of which are of long tenure of 20 to 30 years. We have seen the increased volatility in the wide spectrum of financial assets and markets. We have to live to adjust to it. We have to live to handle and manage the risk prudently. That is why I would advise caution that in order to deal with volatility that would come, we have to be prudent, especially in not overstretching ourselves in financial arrangements.
Meanwhile, gold prices rose today after the U.S. Federal Reserve raised interest rates for the third time since the 2008 global financial crisis. Spot gold rose 0.5% to $1,224 per ounce after touching $1,225.76, the highest since March 7 earlier in the session. U.S. gold futures for April delivery, which ended their trading day on Wednesday before the Fed statement was delivered, were up 2% at $1,225 an ounce. Analysts say prices of the yellow metal could find further support from uncertainty over other elections in Europe. And at the debt market here in Nigeria, investors were upbeat on the Treasury bill segment, with average yield contracting 4 basis points to 16.68%. Likewise, the bond segment closed on a moderately bullish note, with average yield easing 2 basis points to 16.38%. There were also Treasury bill and bond auction on Wednesday. Let's get the details from fixed income dealer at Wema Bank, Ifeanyi Akweche. Good afternoon, Ifeanyi. Thank you very much for joining us.
Yes, good afternoon.
So what is the result of yesterday's Treasury bills and bond auction?
As a result of the auction yesterday at the NCB, today the market has actually reacted in the opposite direction. The market has been very more bearish today. Basically for some reasons, for some funding that the market will be experiencing in a few today and in a few days. We had a normal auction today. CBN selling as much as 34 billion for the 336 days Treasury bills at the home auction. We're also expecting FX funding for the day. The CBN is meant to intervene in the market, and also as a result of profit taking in the market. And so the market has actually been very bearish both in the bond and the T-bills market at the moment.
Well, the market's responding positively. What is the yield trading at as we speak?
For the bond market, yields are actually around that 16.2% at the bond market. But for the treasury bills, generally market has been trending upward to the tune of 18.6, 18.5, depending on the tenor of the instrument that we're talking about. But for the short tenor, there has been a lot of bearish performance in the market around the short tenor. We expect the trend to continue in a few days, at least for the funding, up to the time that the market is actually expected to fund, fizzle out.
Now, in all of this, what is your expectations in terms of liquidity?
As a result of the maturity that we have, as of today, we had a net inflow of about 1.6 billion OMO maturity. We expect the market liquidity to actually contract further as a result of some of these funding, the OMO auction funding, the bond auction funding, and the FX auction funding. So we actually expect liquidity to contract more.
All right, thank you very much, Ifeanyi. Thank you for your time. Ifeanyi Akweche, fixed income dealer with Wema Bank. Africa's EcoBank expects its new digital banking platform to help to boost its customer base across the continent to 100 million from 13 million by 2020. The lender said this after announcing that it had signed up 1.5 million personal accounts through the mobile app. EcoBank has operations in nearly 40 African nations, some of which have been pressured by the commodity price slide and unfavorable currency swings that have prompted the bank to strengthen its focus on the relatively stable consumer markets. We'll take a quick break. When we return, we'll look at how the oil price is reacting to the Fed's decision. Just stay with us.